Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. An indecisive doji cross yesterday as the market is seemingly consolidating and making an attempt at building the February to date bull channel, currently 106.41 to 111.28, that I mentioned last time. This bull channel is highlighted in bright red on my daily chart. Above we have congestion from the April 2020 low at 107.25, and then the May 2020 low at 107.66, followed by the slowly dipping medium moving average, currently 108.09, and the short medium moving average, currently 108.85. Meanwhile, below the lower bull channel line, we have the 2020 low at 106.35 and the April 2017 low at 105.68. The 2020 low had previously managed so well to slow the decline and turn the market back up last week, as well as working in conjunction with the April 2017 low back in February and March in doing the same. Below these, we have the slowly rising long moving average, currently at 105.12, rising up into the frame, moving up through the February and March lows from 2017 at 104.92. So far today, an attempt at the April 2020 low overhead, but pulling back, though not as far as to look at the lower bull channel line. Not yet, at least. Cable, aka sterling against the US dollar. An interesting hammer pattern type yesterday after the previous session's bearish harami. I suspect this was most likely caused by interference between the market and the slowly rising short medium moving average, currently 124.44. We're currently in an area of congestion, seen in April and mid-March, between roughly 124 even to 125 even. Below we have the interesting combination of the ever so slowly rising medium moving average, currently 123.03, and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. As I previously said yesterday, the market is now in a zone between the previously mentioned medium moving average plus 50% Fibonacci support combination below and the combination overhead of the September 2020 low at 126.72 and the 50% Fibonacci line of the June 2016 to September 22 move at 126.99. There's also the possibility of a bull channel here as in euro-dollar, but it is less distinct here, so I'm not inclined to draw it just yet. So far today, a dip below the short medium moving average, but not by far, and not enough to test the 50% Fibonacci line below as yet. Euro sterling. A third bullish white soldier yesterday, though it was perhaps the first or maybe the second that actually looked like one. Nevertheless, the market did halt and then turn up and away at the 85.80 zone, a region which, as I recently said yesterday, or not yesterday, day before yesterday, and I quote, I would look for the closes and lows from October, November and December last year down around 85.80 as perhaps being a better region of support, end of quote. Overhead we have significant resistance at the 86.69 area from the lows of May. Now so far today, well, a higher open and a small expansion actually of today's range, but seemingly no more than a small reactionary move up and looking like either an indecisive doji cross or an indecisive spinning top right now. US dollar against the Indian rupee. A second bullish white soldier yesterday in a test and breach of the overhead broken upper time, currently at 82.56, of the October 2022 to January 2023 mildly bearish shift pitch hook, highlighted in green on my daily chart. However, the market did not close over it. This move higher was prompted by the intertwining of the medium and short medium moving averages below, currently at 82.20 and 82.16 respectively. The main feature remains the recent bow tie formation of the short moving average, currently 82.56, the short medium and medium moving averages. This triple crossover pattern sets up the opportunity for a move higher, as the moving averages went in and out of the bow tie in the right order and are mainly pointing higher. Additionally, the theory indicates that between 20 to 25 sessions after crossover, we may see a move in the direction of the bow tie as a result. Thus, between the 20th and 27th of June, look out for such a move. We also have, though I'm perplexed by its lack of influence here, the ascending triangle formed between January to March, highlighted in dark blue. The market's having difficulties in interpreting this pattern. However, the top side is currently capped by the extension of the upper trend line of the ascending triangle, currently 82.96, with the October 2022 high at 83.26 as resistance beyond that. So far today, a slightly lower open, but we've moved higher again, up through the upper time, but not much more than that, as we are still within yesterday's range. US dollar against the Brazilian real. A third bearish black crow yesterday and a second consecutive close below the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. This was further bearish pressure from the declining medium moving average, currently 509.10, and especially from the declining short medium moving average, currently 501.55. We also have overhead the lesser Fibonacci lines at 505.73 and 507.39, and the significant 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87, plus the upper time, currently 511.18, of the broken late July to late September 2022 bearish shift pitchfork. This pitchfork is highlighted in dark blue on my daily chart. Now this pitchfork is important, as below we have the 2021 low at 489.08 and then the middle time of this same pitchfork, currently 488.16. There's also the other main pattern here other than this bearish pitchfork, and that is the November 22 to date bear channel, currently 483.25 to 531.67, which is highlighted in bright red on my daily chart. Even now, after all this time, still sitting over all of this, is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A bearish black crow yesterday, not quite making it as a key reversal down or even a bearish engulfing pattern, though the second lowest close we've seen since July 2017. Above the market we now have the neckline, currently 1770.03 of the February to April 2021 head and shoulders top. Further up we have the declining short medium moving average, currently 1790.28, as well as the August 2017 low at 1756.93. Looking below we have immediate support from the July 2017 low at 1743.62, which is being tested as I speak, as well as the congestion of the March 2016 low at 1709.23 and the April 2016 low at 1703.89. However, the key to all that's been going on and the key to the support below is highlighted in dark blue on my daily chart. It is still the September 2022 to date bear channel, currently 1729.49 to 1849.63. This bear channel has acted superbly in showing the way lower for so long. So far today, well, a small attempt lower at the July 2017 low, but not really penetrating it. There's a theory potentially that we might be building a potential double bottom, but it's very, very early to start talking about things like that.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.